Welcome, friends. Today, we are going to study together the problem of budgeting. Before that, let us see what the budget actually means. A budget is a predetermined statement of management policy during a given period, which provides a standard for comparison with the results actually. Another definition says that budget is an estimate of income and expenditure for the set period of time. Generally, this period of estimation is of 1 year, and if it goes beyond this, then it is called as projection. Now, for every organization, separate budget is prepared for each and every department. Then, the cash budget is prepared by the finance department, and finally, after merging all the departmental budgets, a master budget is prepared for the company. The starting point of the budgeting process is the preparation of the sales budget. The sales budget shows the quantities of each product that the company plans to sell and the intended selling price. Now let us move to the question.
So, here we are given a problem for NICE Incorporation to prepare the budget for the quarter ending June 30. And the budgeted sales for the next 5 months are given to us, and the selling price per unit is also given, that is $10 per unit. Also, there is some more information given, that is the ending inventory that is to be maintained at the end of each month is given, that is 20% of the next month's budgeted sales in units. And also the opening inventory is also given of the finished good, that is 4,000 units on 31st March. Now let us move to the solution. First of all, we will prepare the sales budget. Since the budgeted sales is already given to us, so we don't have to do any calculations here. We just have to put the numbers in the given format. That is, for the month of April, the sales are given, that is 20,000 units. For the month of May, it is 50,000 units. And for the month of June, it is 30,000 units. And by adding all these, we can get the quarterly budgeted sales, that is 1 lakh units. And we should also put the number for the July because it will be used later in the process. So, and the selling price of the unit is also given, that is 10 rupees per unit. So we should also put that in the data, and by multiplying it, we can calculate the sales revenue that we will be generating in the following months. It is a simple calculation, so I'm not using any Excel formulas for it. You can directly put the number, that is 2 lakh, 5 lakh, 3 lakhs, and for the whole quarter, it will be 10 lakhs. नाउ लेट अस मूव टू द प्रोडक्शन बजट. प्रोडक्शन बजट में हम सबसे पहले देखते हैं कि हमें अगले मंथ में कितना सेल कर सकते हैं हम. तो सबसे पहले हम देखते हैं कि अप्रैल मंथ में हम 20,000 यूनिट सेल करेंगे. तो 20,000 यूनिट तो हम प्रोड्यूस करेंगे इस मंथ में. और अगले एक और कंडीशन गिवन है क्वेश्चन में कि 20% अगले मंथ का बजटेड सेल्स का 10% 20% हम इस मंथ में प्रोड्यूस करेंगे. सो अगले मंथ की हमारी मई की सेल होती है 50,000 यूनिट्स, उसका 20% 10,000 हम इस मंथ में प्रोड्यूस करेंगे. तो टोटल हमारी इस मंथ की रिक्वायरमेंट प्रोडक्शन की हो जाती है 30,000 यूनिट्स. लेकिन हम देखते हैं कि उसमें से एक और कंडीशन गिवन है कि 4,000 यूनिट्स हमारी पहले से हमारे हाथ में थी 31 तारीख को मार्च में. तो अप्रैल में हमारे पास वो थी, तो हमें उससे दोबारा बनाने की जरूरत नहीं है. तो हम अपनी जो 30,000 यूनिट्स है उसमें से 4,000 लेस कर देंगे. तो 20,000 इज द टोटल रिक्वायरमेंट फॉर दिस मंथ फॉर द प्रोडक्शन, जिससे हमारी सारी कंडीशन फुलफिल्ड हो जाती हैं. फिर ऐसे ही हम अगले मई के महीने में देखते हैं. मई में हमारे 50,000 यूनिट्स सेल कर सकते हैं हम लोग, जिसमें से हम ये देखते हैं कि अब अगले मंथ के लिए हमें कितना रिजर्व करना है. अगले मंथ के लिए हमें रिजर्व करना है 30,000 का 20%, दैट इज 6,000. अब हम 6,000 रिजर्व करेंगे. 6,000 रिजर्व करने के बाद हमारी टोटल इस मंथ की प्रोडक्शन रिक्वायरमेंट्स आ जाती है 56,000. बट फिर से हम देखते हैं कि पिछले मंथ की जो एंडिंग इन्वेंटरी थी वो इस मंथ में कैरी फॉरवर्ड हो गई है, तो उसे हम लेस करेंगे क्योंकि वो हम ऑलरेडी प्रोड्यूस कर चुके हैं. तो हम 10,000 फिर इसमें से माइनस करेंगे, तो हमारी टोटल प्रोडक्शन रिक्वायरमेंट्स इस मंथ की आ जाती है 46,000 फॉर द मंथ ऑफ मे. ऐसे ही हम जून के लिए करेंगे. अब आप सीख चुके होंगे तो आप भी मेरे साथ करिए. 30,000 की सेल्स हमारी, जिसमें से अगले मंथ की एंडिंग इन्वेंट जो सेल्स है उसकी जो रिक्वायरमेंट हमारी वो है 25,000 की 20%, दैट इज 5,000 यूनिट्स। तो टोटल हमारी रिक्वायरमेंट हो जाती है 35,000 एंड उसमें से लास्ट मंथ की एंडिंग इन्वेंटरी फिर से हम कैरी फॉरवर्ड करेंगे, दैट इज -6,000। तो अब हमारी टोटल रिक्वायरमेंट इस मंथ की प्रोडक्शन की हो जाती है 29,000 एंड फॉर द होल क्वार्टर वी कैन ऐड ऑल these three final numbers to get the quarterly production numbers. Let me add this. Yeah. So 1,01,000 is the total production requirement for the whole quarter as per the question. Now let us move to the next part of this question. In this part of the question, we are required to prepare the direct material budget and direct labor budget. For that, we are given the information that at NICE, 5 pounds of material are required per unit of product. That is, एक यूनिट को बनाने के लिए हमें 5 pounds of material की जरूरत पड़ेगी. And also, management wants materials on hand and at the end of each month equals to 10% of the following month's production. That is कि अगले महीने की जो प्रोडक्शन होगी उसका 10% का मटेरियल रिक्वायरमेंट हमें इस महीने में मेंटेन रखना पड़ेगा. And also we are given the opening amount of inventory, that is 13,000 pounds, and material cost per pound is also given, that is $0.40. And for the labor budget, we are given the information that at NICE each unit of product requires 0.1 hours of direct labor. That is, एक यूनिट ऑफ प्रोडक्ट बनाने के लिए 0.1 hours और डायरेक्ट लेबर लगेगा. The company also has a no layoff policy, so the all employees will be paid 40 hours of work each week. In exchange for the no layoff policy, workers agreed to a wage rate of $8 per hour regardless of the hours worked. For the next 3 months, the direct labor workforce will be paid for a minimum of 3,000 hours per month. मतलब हमें minimum 3,000 per hours तो pay करना ही पड़ेगा उनको. Now let us start with the direct material budget. For the direct material budget, we require the production units, the budgeted production that we are planning to produce. For that, we should copy the already solved budgeted production units from the table and copy it to the direct material budgets table. Now, we are also given that at NICE 5 pounds of materials are required per unit. So we multiply each unit by 5 to get the total requirement of material. So the material requirement for the month of April will be 26,000 into 5, that is 1,30,000. For the month of May it is 2,30,000, and for the month of June it will be 1,45,000 units. And for the whole quarter it will be the summation of all these three. That is sum, that is 5 lakh. That is 5 lakh 5,000 units. Now we will add into this the desired inventory. The desired inventory level that we should maintain at the end of each month. It is given that we should maintain 10% of the following month's production. So next month's production is 23,000, 2,30,000 units, and 10% of that is 23,000. So we will add back these 23,000 of units of material into our this month's material requirement to get the total requirement, that is 1,53,000. And from this, now we will less the beginning inventory because it is already produced. The beginning inventory is given as 13,000 units. So we will minus 13,000 from this to get the material that is to be produced by the company. That is 1,40,000 units. Now we are also given the price per unit. So the price is 0.40. So we can get the purchase amount. The purchase amount that we will be spending on the month of April. That is 1,40,000 into 0.4. That is 56,000 is the amount, the purchase amount that we will be paying in the month of April. Now let us move to the month of May. In the month of May, the desired ending inventory will be the 10% of June's total requirement, that is 1,45,000, and 10% of that is 14,500. We will add it to the production needs. So we will get the 2,44,500 requirement of materials, total requirement of material. Now we'll less the beginning inventory from this. So we'll apply the same concept as we have used in the production budget. That is, the ending inventory for the last month will become the opening inventory of this month. That is, the ending inventory of the last month is 23,000. So it will become the opening inventory. So minus 23,000 from this, we get 2,12,000. 2 lakh. Uh, Let me do it with the help of Excel. Yeah, 2,21,500. Now we'll multiply it by the per unit cost of material, and now we should get the number. It is 88,600 is the purchase amount for the month of May. In the month of June, the production needs are 1,45,000, and the ending desired inventory is, for this we require the production budgeted numbers for the month of July, that is 23,000. We should copy it to the direct material table. 23,000 multiplied by 5 will give us the production needs for the month of July, that is 1,15,000 units, and 10% of this will be the desired inventory level that we should maintain in the month of June, that is 11,500. So by adding this, we will get that 1,56,500 is the total requirement of inventory of material. From this, we will subtract the ending inventory of May, because it will be the inventory that will be consumed in the month of June. That is, the ending inventory is 14,500. We will less that from this figure to get a final need, that is 1,56,000 minus 14,500. That is 1,42,000. And if you multiply it by 1.40, we will get the purchase amount of this. That is 56,800 for the month of June. By adding this, all these three figures, we will get the total purchase amount for the whole quarter that we will be spending on the purchases. The total quarterly purchase amount is 2,01,400. So we have prepared the direct materials budget. Now we'll move on forward to the direct labor budget. For this, we are given that at NICE, each unit of production requires zero point 0.1 hours of direct labor. So now we will find out the total number of labor hours that each month consumes. So for this, we require the production numbers for each month, that is 26,000 for the month of April. For May, it is 46,000. For June, it is 29,000. And for July also, we should write that is 23,000. The direct labor hours rate is zero point 0.1. By multiplying it by zero point 0.1, we will get the exact number of labor hours required for that particular month. That is 26,000 into 0 0.1 will give us 2,600 labor hours. For the month of May, it will be 4,600 labor hours. For the month of June, it will be 2,900 labor hours. And for the month of July, it will be 2,300 labor hours. And in this question, we are given an information that there is a policy of a company that minimum 3,000 hours per month should be paid by the company. So we should write here the minimum 3,000 requirement that we have to pay. each month. Now, the next column is labor hours paid. We should compare the guaranteed labor hours with the labor hours required. If the labor hour required is less than the guaranteed labor hours, we pay the guaranteed labor hours. But if the labor hours required is more than the guaranteed labor hours, then we have to pay the incremental labor hours paid. The incremental labor hours required also we should pay. So in the month of April, the labor hours required is 2600, but we have to pay 3000 labor hours. And the labor hours wage rate is also given, that is $8. So direct labor cost will directly come to 3000 multiplied by 8, that is 24,000. In the month of May, the labor hours required is 4600, so we have to pay 4600 labor hours at the rate of $8 per hour. So the total amount we are paying for the labor for this month is 36,800. And for the month of June also, the minimum guaranteed labor hours should be paid, as the labor hours required is less than guaranteed labor hours, so it will be same as 24,000. So by adding all these three numbers, we will get the total direct labor cost for the whole quarter. That is 84,800. So now we have prepared the direct materials budget and also the direct labor budget. Now let us move to the next part of the question, that is the production overhead budget. For this, in the question, the direct data is given on the production overhead cost that the company incurs. We just have to put these numbers in the table to get the overall production overhead cost. Let us do that. For the month of April, the indirect labor cost is 17,500 and indirect material is 7,000. Utilities is 4,200. Rent is 13,300. Insurance is 5,800 and maintenance is 8,200. By summing all these up, we can get the total production overhead cost for the month of April. Let us add all these numbers and we will get the number, that is 56,000 is the total production overhead cost in the month of April that the company is doing. In the month of May, again we will do the same procedure by adding all these numbers. So let us do it quickly. 26,400, 12,600, 8,400, 13,300, 5,000, 13,300, 5,800, 9,400, and the sum of all these is 76,000 in the month of May. In the month of June, it is 17,900, 8,600, 5,200, 13,300, 5,800, 8,200. The total is 59,000 for the month of June. And for the whole quarter, we should add these final three figures to get the total production overhead cost for the whole quarter. That is 1,91,000 is our total production overhead cost for this quarter. So now, as per the budgeting process, we have finished the first phase in its preparation. That is the sales budget, the production budget, and the production budget include the direct material budget, the direct labor budget, and the factory overhead budget. The next phase will be continued in our later videos. Thank you for watching and do like us. And please comment your suggestions in the comment box. Thank you.